It was an 8-figure campaign, I believe. It did about $10 or $11 million in pre-orders. You'd imagine hallelujah until the creator got to a stage where they realized it was going to probably cost 15 to 20 million to actually fulfill the campaign. Hi everybody, Derek here again from Crua. In the last video, you'll have heard me talk about the 4 different categories of modern day crowdfunding. In this little video, I said or I mentioned that I'm going to equity crowdfunding and you as a potential backer of an equity crowdfunding campaign, what to look out for. So there's risk attached to this, but how do you mitigate that risk and how do you give yourself the best chance of a positive outcome? So that's what I'm going to talk about here in this video. Now, equity crowdfunding is a different thing. You're investing in the business. So it's not the project, it's not the product per se, it's the business. So again, if you're looking at a Seedrs campaign, Republic campaign, Crowdcube campaign, what to look out for, I guess, from our experience, again, as an equity crowdfunded company that has made all the mistakes, believe me, and also a backer of equity funded companies and campaigns. A few little things to look out for, again, that can mitigate your risk, I guess, or reduce your level of risk. First of all, again, disclaimer, there is risk attached to all of these, so don't fool yourself into thinking there isn't. There is risk, of course, going to be attached to all crowdfunding campaigns and in general business. But again, to mitigate the risk, the first thing I would look at is the business model. And by that I mean, first of all, the old one, right? What's the problem they're solving? What's the solution? And can that solution be offered at a price that's going to be acceptable to a large enough amount of people? It's as old as time itself. Problem, solution. What's the cost of solution? Is that going to be acceptable? Okay, get past that. Yes, it is solving a problem. Yes, it is. I like the solution and I think the pricing is going to be about right. Then you're looking at the model, the business model. In particular, I'm kind of talking about the P&L, or at least a version. And again, it will depend on what stage of the business that you're coming in on and how far along the business is. But looking at kind of the business model and the costs, the basic levels essentially of the P&L. Are we reasonably growing towards profitability? And by that I mean, is the business in its projections expecting to do 20 times the revenue on just twice the staff? That would be a red flag. So you would ask the question. No, there may be an answer and there's an economy of scale, etc. They're the little question to ask, and a lot of that is not so much that you have an exact answer, but at least you know that the founders are thinking about it. The team. By the team I mean the executive team, I mean the directors, the advisors around the team, around the business. What's their track record? What in their past would indicate that they can see this through? Because believe you me, in the startup world, there's lots of ups, but there are lots of downs. There's lots of nights looking at the ceiling. That takes a strong team. That takes a strong network of people who will stick together, who will get this over the line, and who believe in it. Okay, so what's the team's track record? What's the accessibility of the team? So will the founder meet you in person? Again, this all happens online, so there's a little bit of a step away, but if you wanted to, I've met loads of investors in person. I offer it again, no problem. Now I've been sent on many's a wild goose chase as well, but that's par for the course. Get on with it, dust yourself down. So how accessible is the founder? Are they willing to meet you for a coffee? Are they willing to at least get on a call with you, etc.? I would think that they should be. If you're going to invest in a business, I would always make myself available for potential investors. Very, very important, I would say. How focused are the main people in the business? So the men or women in the business, the founders, how focused are they? Do they have 2 or 3 other things going on? I would always see that as a red flag. Getting a startup business off the ground is difficult enough without trying to focus on 3 or 4 or 5 different things at the same time. It doesn't work in my experience. If it is a product-based business, be it B2B or D2C or whatever, do the founders understand the supply chain? Do the founders understand the nuances around the supply chain, the complexities of the supply chain? Absolutely critical, and there are lots of problems in that supply chain. A lot of supply chains get very, very complicated very, very quickly. Do the founders understand the workings of the supply chain? It took us quite a number of years. We had a pandemic thrown in there in the middle of it, but I think we're in a good place now to understand our supply chain. That can be make or break for a lot of businesses. Have the founders stress tested their projected cash flows? One thing is for certain, nothing happens exactly as planned. So is there stress testing in there to increase runway? Is there a plan to raise so that they can get to their next cash, be that profitability? But in more cases, it's going to be another round of funding. Can they get to their next cash installment, even if things don't go according to plan? So in other words, stress testing the cash flow model. And worst case scenario of the cash flow model, we have cash for whatever it is, 5, 6, 12 months, whatever that figure is that you think is reasonable. The key thing here for me is stress testing You know, things never happen exactly as planned in the startup world. My last point is founders should have a basic understanding of P&Ls, of cash flows, as I just mentioned, of balance sheets. Now, I'm not saying they need to be accountants, I'm not saying they need to pass their accountancy exams, but they certainly need to have a basic understanding. This took us a while, to be honest with you, and took me a while. Now I know our P&L inside out. I almost wake up sweating and dreaming about it at night. But, you know, it took me a while to get to that and to understand that, you know, if you don't understand that, you're never going to get to that profitability. You know, you have to be able to understand at the very least those numbers in your P&L. You have to always be looking for ways to improve them, and I think a basic understanding of the basic accounting documents or the basic accounting journals, etc. is really, really important here. In particular, profit and loss, the balance sheet, and of course the all-important cash flow model. Okay, so there you have it, I suppose. A few pointers. Hopefully you'll find it helpful. What to look out for, I guess, when backing an equity crowdfunding campaign. If you have any questions, feel free to put them in the comments down below. I'll absolutely answer them, no problem. We do monitor our comments quite regularly, so if you have any questions, stick them into the comments. Quite happy to help in any way I can at all. Thanks a million for watching. We'll see you in the next video.